Yeah, if you turn up the volume for me, that's good.
Okay, that's almost max.
Yeah, that's great. Okay, very good. Thanks. Thanks very much.
Fire away.
Could you give me a little bit of introduction to the conference to this point and how I can be most helpful? So I'm sorry to just jump in like this.
Well, we've had a couple of speakers. David Kotok led off looking at the situation with central banks globally and what's happened to all the reserve creation. And then Michael Kumoff talked to us about the old Chicago view of banking and how we might want to change the way we do our banking. And then we had Mr. Kotlikoff talking about simple form of banking, and I'm sure you're familiar with his views. So
of course,
those are our three presentations ahead of you.
Very good. Well, I appreciate it, and I've been asked to talk a little bit about the international implications, especially the development implications of the financial crisis and of the banking sector. And maybe it's useful to just share with you a sense that I received a few days ago in meeting with about 100 UN ambassadors who are discussing the global economy and global policy framework for the period from 2015 to 2030, which is very much the United Nations agenda. What was palpable in the room was a very, very deep sense of anger and grievance at the American financial system. And I think that this is important to state because we have our debates as if we're, sometimes operating in a cocoon in a way. And the rest of the world, especially the developing world, feels that they have been the victims of the U.S. And its mismanagement over the last few years. And I think that it's a geopolitical reality that is a very real and very justified one. In other words, the sense of the 2008 crisis is you did this to us. And the failures of regulation in the United States have contributed markedly to instability and economic stresses in other places. And as several of the ambassadors reflected, the U.S. and the IMF more or less treat the policy discussions as if nothing really has happened. And what several ambassadors said is, why is it that we're taking advice from the people who have mismanaged the financial system so badly? So I think this is not an insignificant context. It's hard for the key currency and the center of the world financial system maybe to hear this very well and to take it as seriously as it should be taken. But the backdrop from the world's point of view is that the United States has failed badly in financial management, and that the implications of that are felt around the world. My feeling about this is actually similar. And I think that it's worth speaking outside of the monetary and macroeconomic framework for just a moment. And that is to reflect on the Fed's role as a regulator and on the real lessons of the financial crisis since 2008. And the angle that I would emphasize in this, again, I think is not typical for us as economists, but it is the massive illegality that has been exposed in the system. I am tracking systematically the news every day of new settlements of the financial markets to SEC and other legal proceedings. We have really a mountain of criminal and fraudulent behavior that is very much part of the 2008 scene. And we don't usually speak in these terms. We usually speak in terms of bubbles and mistakes, misjudgments, and so forth. But the amount of what I would regard as utter criminality and financial fraud is absolutely enormous. And it's almost daily, whether it's the insider trading scandals or whether it's LIBOR scandal or whether it's the abacus and similar settlements on selling toxic assets by the investment banks. We are, because we're the inside of this, I think we are not actually feeling the full weight of not only regulatory failure and moral failure, but massive legal failure that's implicated in this as well. And today, just as an example, I was, clipped three stories from the news. One was that yesterday a judge approved the settlement with SAC Capital, a $602 million fine for civil insider trading. It's that's a modest fine. The judge expressed his concern that SAC Capital did not have to admit or deny any of the claims that were made in this. So this is a settlement without any resolution of the substantive topic. One asks whether $602 million fine is likely to have much effect. Well, the same day we have the story, of course, that the owner and CEO of SAC Capital took home last year in compensation $1.4 billion personally. So the company is paying a $602 million fine, and at the same time, Stephen A. Cohen takes home in compensation $1.4 billion in personal compensation for his management of the company. And if we just go back a few days, his top trader was arrested in handcuffs and led off from his apartment on Park Avenue. So this is what's called the American financial system at the moment. It's really mind-boggling to me. And it is an unregulated, essentially lawless environment that is not getting any more lawful. So I checked what Stephen A. Cohen, his political engagement this past year, and he gave $217,000 in campaign contributions. Now, this is a pittance from the point of view of his wealth, obviously, as a share of $1.4 billion paycheck. But $217,000 with our cheapskate politicians actually goes a long way to making sure that Mr. Cohen will be very well treated by his senators and by others who are giving ample protection to all of this. So this is where I would start, actually. I think the macroeconomics is important, but I think that the lawlessness and the sense of the world in the complete impunity of the system is absolutely massive. And wherever you look, we see the same thing continuing till today, and that is massive, massive bonuses at the top of the financial markets, massive civil fines being paid for really incredible behavior, and massive campaign contributions going from this financial leadership to the political class. Yesterday's front page story of the New York Times gave 8 salaried figures. David Tepper, $2.2 billion paycheck. Ray Dalio, $1.7 billion. Stephen Cohen, $1.4 billion. By the way, half of these companies didn't even beat the market last year. It doesn't matter. They have a fee structure that is independent of any real performance, and when they fail, of course, they don't have to give back anything in this till today, including last year's billion-dollar compensation holder, John Paulson, whose gold price bet is announced today to have lost $1.5 billion for his shareholders. But I can guarantee you he's not putting $1 billion back into his company. It's only upside, no downside. And when you look at the political linkages of all of this, Daniel Loeb, who gets only $380 million of compensation, gave last year $551,000 in campaign contributions. Ken Griffin, who took $900 million for Citadel, gave $2.7 million of campaign contributions. David Tepper of Appaloosa gave $601,000 of campaign contributions, and so forth. And many of these companies are involved in these civil lawsuits, payments for fraudulent behavior that is neither admitted nor denied. The final thing I would add on all of this that shocks the world is that we have perfected not only this system, but we've perfected the system in which these companies are domiciled in the Cayman Islands, or they're domiciled with partners in the Cayman Islands, taking away any accountability and further not only masking them from tax liabilities on these earnings, but also masking them from many legal liabilities. The latest, of course, as you know, is that they've created reinsurance companies in Bermuda and in the Cayman Islands that allow them to invest in their own firms through a tax-sheltered mechanism that is only a shell from the point of view of insurance. So my question to you, you're part of the Fed. Where is the Fed? Because this is about basic regulatory practice. It seems to me, in truth, that we have a system that is out of control right now, that's politically out of control, regulatorily out of control, out of legal bounds, out of responsibility, and we've invented a system where you get to take home billions of dollars in personal compensation. Your shareholders pay hundreds of millions of dollars in fines. You shelter your money in the Cayman Islands in agreement with the IRS, and nobody seems to control it at all. And, you know, I sit with the diplomats here in New York. I can only tell you that the level of unhappiness has risen to really very, very stark proportion. And I can only agree with them that I don't see any real progress being made in getting this right. So this is my brief message. I think we're beyond the macroeconomics right now. We're beyond the prudential issues. We're to a very gut level of legal accountability, fairness, tax regulation, transparency, and a basic sense of fairness. And my view is we don't have it right now. Wall Street is pretty lawless, and unfortunately, the regulatory system that we have is nearly broken down. That's my take from this end.